everybody, so today we're going to talk about the death of the office market. Now, this is something that I've been watching a lot. As you know, the real estate market is many things. It's office, it's multifamily, it's industrial, it's retail, it's mall, it's residential, and even in residential, it could be condo, high-end residential. There's all kinds of things that make up the real estate market. And be sure to wait to the end because I'm going to talk to you about my predictions for 2022 on what I think is going to happen here. So let's first talk about what an office market is. So a lot of you might work in real estate just like this. This is a high-rise market in some city somewhere. It doesn't even matter where. But the fact is that people come and go to these places every single day. And as you all know, that's changed. So as you guys know, I love to follow this stuff. And what's happening right now is these are global issues. Most of you guys are looking at where are my investments and where am I now? But I love to look at this on a global scale. And as you can see on this chart just here, this is deal volume change. You've got San Francisco, Paris, Shanghai, London, globally, and you can see things are happening all over. So work from home is not just the United States. So now a little closer to home. This is the United States. These are just some markets: Atlanta, Boston, Chicago, LA, Manhattan, San Francisco, and Washington, D.C. The purple represents 2019, the teal represents 2020, and the orange represents 2021. This is net absorption, which means things are going backwards if it's on this side. And as you can see, and should be no surprise to anyone, every single market is negative, San Francisco being the most negative of all. Now, before we go much deeper, there are a few things that I want you to know about office markets. One, leases are typically 3 to 5 years. They can also be shorter, but they can also be longer. But generally, they're about 3 to 5 years. As you know, we're now in the third year of the pandemic, and so that's why this is going to become very important. The second one is most leases have what's a CAM charges, or common area maintenance charges, inside of the lease, which means that the landlord does not pay for things like lighting, things like hallways, things like elevators, things like snow removal, landscaping. All those kinds of things get transferred onto the lease of the individual tenants through what's called a CAM charge. The third thing is the CPI, or the Consumer Price Index, which is, of course, an inflation factor, which we talk a lot about. And as you know, these CPI charges, as things go up for the landlord, they also go up for the tenant. Therefore, the conclusion is that these leases are going to soon expire. These landlords are going to be transferring higher costs in operating to the tenants, and tenants are going to now make decisions. Now let's talk about what you all know is what I call the office market's new normal. One, flexibility. Employees are looking for work from home and flexibility from their employers, which is drastically affecting the amount of space that the tenant needs and the employee needs. Number two, the office experience itself is changing, as you guys know. So think about AI technology, think about common areas, think about shared workspaces, think about lockers, think about more concentrated team meetings around people's schedules. Of course, number three, health and safety continues to be a major factor in this market. These health and safety issues will continue to drive more and more people away from the office experience. So now let's talk about the 2022 predictions for the office markets. And the reason why I think this is important, because a lot of things happen around the office markets. People pour out of their offices and go to lunch. People pour out of their offices and they go get a beer after work or meet for happy hour. All kinds of things happen before, during, and after work in these office areas, and it has a ripple effect across every municipality there is. So the first one, right now, national vacancy for office is 18.1%. This isn't good, guys. Multifamily is less than 5%. Industrial is less than 5%. Retail is getting beat up a little bit, but not as much as office. And as I just told you, a lot of these people are still tied to their leases. My prediction is that vacancy is going to continue to go up, because as people start to renew their leases, they're either going to downsize or eliminate them altogether as they allow for their own people to be able to work from home. They are not going to need the amount of space they have. The second is renewals and leases. So as people's leases renew, you can expect it's already happening. They're downsizing or eliminating, and the new leases are now looking for new technology, smaller floor plates, and for the landlord to put more money in around all of those things so their employees can work from home and have more of a collaborative work environment. And of course, we have all the health and safety issues that the tenants are now requiring that the landlords must put in. So 3, I predict that asking rents are going to continue to go down. Now, this is a basic supply and demand issue. The more supply you have, the higher vacancy you have, the more competitive it is, and the more leverage a new tenant has over the landlord. So I predict that these asking rents are going to go down in many, many markets over the next couple of years. 4, this is a positive. There will not be a lot of new supply because 1, banks are looking at this 18% vacancy rate, number 1. But 2, the cost to build something right now is crazy due to all these supply chain issues. So just trying to build something new drives the cost way up, which means that they have to get higher rent. And 5, we're still in the middle of this pandemic. We're having new variants pop up, and there's a lot of uncertainty for everyone right now on the future of people just getting together. So if you're an investor or you're looking at buying one of these and putting a group together, be very, very careful, because I believe that expenses are going up and income's going down, and you want to be careful that you're not catching a falling knife. So thanks for watching.